What happens when a household name like Kraft Heinz quietly keeps losing ground in the market? At Insightful Value, we spot these under-the-radar stories and dig deeper. Today, we're talking about Kraft Heinz. The stock has been in a prolonged slump, and many investors have moved on. But should they have? Is this a fading brand story or a potential comeback play? Stick around as we break it down. This review is for informational and educational purposes only and should not be considered financial advice. Kraft Heinz is one of the most iconic names in the food industry, with a lineup of brands that include Kraft, Heinz, Oscar Mayer, and Planters. It's hard to find a kitchen in America without at least one Kraft Heinz product. Yet despite that brand strength, the company's stock performance has been anything but impressive over the past few years. The decline hasn't been sudden. It's been a slow bleed, driven by shifting consumer habits, increased competition, and investor skepticism about the company's growth potential. But here's where things get interesting. Kraft Heinz is still massively profitable. It generates billions in revenue annually, with steady cash flow and a strong dividend yield that income-focused investors might find appealing. The company has also been actively restructuring, divesting non-core assets, and reducing debt. Its focus is now on streamlining operations and reinvesting in innovation and marketing to reinvigorate its core brands. In recent quarters, Kraft Heinz has shown progress in stabilizing margins, managing input costs, and improving its digital and direct-to-consumer channels. New leadership has been more aggressive about adapting to changing consumer preferences, with a stronger push into health-conscious products and plant-based alternatives. The company is also exploring international expansion opportunities and partnerships to tap into new markets and revitalize growth. From a value investing perspective, Kraft Heinz is now trading at a significant discount relative to its historical averages. That's partly due to market skepticism, but also an opportunity if you believe in a turnaround. With a forward PE well below the industry average and a dividend yield north of 4%, the stock could appeal to patient investors willing to ride out the noise in exchange for long-term value. That's the kind of thesis we love at Insightful Value. We specialize in finding companies that are fundamentally solid but out of favor. Our research cuts through the jargon and headlines, helping you focus on the core financials and strategy that really matter. Whether you're just getting started or you're a market veteran, we make it easier to see what others might be missing. For more insights like this, visit us at InsightfulValue.com. We cover undervalued companies in depth and share clear data-backed analysis to help you make smarter decisions. If you enjoyed this video, be sure to hit that subscribe button, give us a like, and check out InsightfulValue.com for more sharp, no-hype investing research. Thanks for watching.